Hello and welcome to another episode of Working Dad Trader. This is the December Christmas Trading 212 portfolio update. Wish you all a Merry Christmas, and we're going to look at how my portfolio has done since I started it in about April time. This is my first year of trading, so we're going to look over that and see how I fared. Remember, if you like this video, then please smash that like button. It really helps. And can you please subscribe as well, because that would be fantastic. And let's go and have a look. Say bye-bye. The 23rd of December, I should just quickly go through and see what sort of changes there have been since my November review. My portfolio is still quite a lot of green, and I'm quite happy with all of that. There's been some really good sort of gains over the sort of April when I started this. Any changes I've made are I've increased my shares in Affria, the cannabis company. I've been quite bullish on this company for a while. They're really quite profitable cannabis company in Canada. Got really good financial figures that I was happy with. And there's quite a lot of news coming that they're going to merge with Tilray, the other Canadian cannabis company, and if that does go through, then they would be by far the biggest cannabis company in all of Canada, and with Joe Biden becoming president and willing to open a door to legalize more sort of cannabis selling companies and sort of outlets, then they're in a prime position to make a lot of money out of that. So that's why I've increased my share in Affria, with the possible merger going to happen, and with obviously the possible laxing of the laws in the States, which would open a massive market for that company. Other than that, I'm quite happy. Another company I bought into was Avon Rubber. Avon Rubber are like a personal protection equipment company. They're a UK company, but they've got a lot of big contracts around the world. And I took the opportunity to buy into them basically because they've had quite a big delay with the US Army over some, I think it's head protection equipment for the soldiers and stuff. There's been a delay because there's been a slight design fault, so that's been delayed by about 6 months. So the contract for that's delayed, and I think that sort of news is why the market crashed on them. But when you look at their figures, they're really quite strong. It's a really quite a good profitable company, strong revenue, really strong net income, which I liked. The balance sheet again was also really quite strong, with loads and loads of assets compared to liabilities. So I think this is just a temporary setback. I mean, from what I can gather, the contracts are still going to go ahead. They've just been delayed, which is going to hurt the revenue possibly for the first and second quarter of 2021. But they're a company that have definitely been going on the up for a while. I just think it's a blip, and to me it was a discount, so that's why I jumped in on this company. Obviously at the minute they are still down on my nearly 2%, just under 2% down, which I'm quite happy with. I mean, this is going to be looking more into 2021 as why I bought this company now, hoping that why it's cheap I can make money out of that in the long term. Canadian Solar, which I bought a while ago, I'm really happy with that. It's nearly 60% gain on my position. It's one of those where you wish you bought more. Any other new purchases was Corsair Gaming. This company, they just, again, I'm looking at what's the future going to be and what sort of it's all sort of online sort of things and gaming. It's not something I've got a lot of knowledge on, I must admit, but I've looked into the company and they sell lots and lots of cool stuff for gamers, lots of cool keyboards and headsets, sort of funky gaming chairs, hardware to make the computer quicker, power supplies, specialist cooling products. It's like you can sort of buy a computer and buy lots of cool add-ons that you can add on to make your computer so much better, and they're one of the leading sort of companies out there that make this type of stuff. And I think online gaming is just becoming a bigger and bigger market out there, that so many more people now are playing against each other online, and that's just going to grow, and then more and more people are going to want to buy their products. So that's why I bought into that company. That was my logical thinking on that company. Quite happy with sort of the way the company's going. It's on an upward trend. Not a lot of profit last year, but I think that's going to increase. This one is slightly speculative, I agree, but I think obviously like the gaming market and online gaming is only going to increase, so that was why I'm happy to take a small punt on that one. The next one I bought in December was a company called Crowdstrike, which is surprisingly done really well already, which that has surprised me. I only bought a small stake in Crowdstrike. Crowdstrike are a cloud-based antivirus solutions and protection company. They sort of sell antiviruses and things to protect your data and your personal things online, which again is a sort of IT online, as we're becoming more online, especially with everything that's happened. We seem to be doing nearly everything online now, so obviously having good security and good protection, good antivirus equipment, programs is essential if we're going to start doing everything online. So that's why I was looking at this type of company, and they've surprisingly done really well in just the few weeks that I've had them. They've just jumped up so massively, so I was quite surprised they've jumped up that quickly. Again, another company that I should probably have bought more in, but it was again just a small stake, and I'd see how the company progressed into 2021. And I didn't expect it to jump that quickly, so I'm quite happy with that, really. Other than that, there haven't really been any changes. Nothing really new as far as that. All of them are going quite well. It's just the odd bit in the red here and there. Magnet International's 42% up. iShares Global Clean Energy, which I was big on back in the summer, because it's obviously something that's to do with caring for the earth and cleaning cleaner companies and producing cleaner energy. Was something that I'm quite passionate about, and so that's why I bought into that, and that's done extremely well as well, so I'm really happy with that. Stoneco, again 64%, really happy on that one. So that's doing well. Walt Disney, again, in the last month has shot up quite a bit as well, and that's 51%. And that's fantastic considering their online streaming service has really taken off, and you think that they're still, most of their parks have hardly been open this year, and they've still got all that revenue to come back once things start opening again. So once all that starts happening again, and as they grow and grow, the online streaming business, where's that going to get to? Where's that share price going to go? So that's fantastic, I think, and so I'm really happy with Walt Disney when I got in there. As far as any companies I got rid of, in the last month I got rid of Cisco, the US food manufacturer that makes sort of food and delivers food to care homes and stuff like that. That got to pretty much where it was before the crash back in March, and I was quite happy to take the profit on that. It was a decent profit, so that's why I sold out of that one. And the big one probably was Twitter. I think I talked about it in November. I sold part of my stake in Twitter, and in December I sold all of my stake in Twitter. I think the reasons being, again, I talked about it in November, was that I just think there's just a few things I just don't like within the company. There's just a few things that sort of maybe small red flags to me, might not be to other people, and I might be proved wrong, and Twitter might do really well. But being as their new users were going down, and just lots of things. I think it's going to be a lot of kickback with all the way they sort of conducted themselves during the presidential election, sort of not being equal and sort of favouring one side. I don't think looks too great on them if they're going to only let things they decide they want to be put out there. So yeah, I had a decent profit on Twitter, so I was happy to sell out of Twitter and take the profit and move on to other things. I've got quite a lot of tech stocks anyway, so I was quite happy with removing Twitter. I think some of the other tech stocks I've got will do better as far as growth, so that's why I was happy to get rid of Twitter. Overall, my portfolio is just under 16%. It's been bouncing around the 16% mark for the last few days, which is pretty good. As we come to the end of the year, my target was 20. Maybe that was a bit ambitious. At one point in the year it was 20%, so I was hoping that was going to stay at 20%, but there's been a lot of bumps in the road. It's taken a long time for Congress to agree to stimulus, and there's been so many lockdowns in the UK and different things going on with the virus situation. Some of these lockdowns, I think I certainly didn't expect so many, and I think a lot of that has hurt businesses. So I think some of it's unforeseen, but if I finish the year in 16%, then I'm really happy with that. It's fantastic. Like I say, I did set myself 20, just because it was going so well at the start of the year. But that's where we are. I think looking into 2021, obviously I need to look back in my first year of trading and evaluate the things that went well, the mistakes I made. It's definitely to learn to have a bit more patience with some of it. A lot of companies that were really growing quite slowly or going sideways, maybe sometimes I was just a bit quick to ditched them and I could have held them and waited, and I could get my timing better on some of the purchases I bought. So I think going into 2021 I'm going to try and look at rebalancing my portfolio into next year. I've got 27 companies in this portfolio and I think possibly that's too many, so I might try and reduce it, and like I say, just try and rebalance it. I think maybe I've got a lot of online companies and stocks, so I might try and look at some of those and just try and get a bit of balance, especially as I think with all the vaccinations coming through that things hopefully will start to reopen next year, especially by the summer of 2021, and then these companies that have struggled because of all these lockdowns then might start doing well again. So that's my thoughts. Okay, so thank you for watching. Hope you enjoyed the video and hope you got something out of it. But please remember, I'm not a financial expert and I'm not giving financial advice. It's just purely for educational purposes and for you to just look at how I've been doing things. Please remember to always do your own research and get your own financial advice. And from then on, then all I want to say is I wish you all a Merry Christmas. Please stay safe over Christmas and look after your family. And I shall see you in probably 2021. Okay, bye.